We witnessed one of the truly saddest days in American history, certainly one of the saddest days of my lifetime, with the attempted assassination of Donald Trump. I think, regardless of your politics, your feelings on any individual, we can all come together and agree that that was a horrid moment. Hopefully, one that galvanizes people. Although I have my doubts. We were very hesitant to even do a show or have a show talking specifically about politics or what happened, because it seems to minimize the importance of that event, but chose anyways to show up and discuss it, because after all, that is our job, to talk about markets, to talk about what's happening and what the likely effects of these events will be. I've got Dave and James here waiting for Mike. I'm not sure if he's going to be here, but Dave, James, and I are going to unpack everything that happened recently and what it means for the market, for the globe, for the economy, and for all of us as human beings. Let's go.
Let's go.
What is up, everybody? I'm Scott Melker, also known as the Wolf of All Streets. Before we get started, please subscribe to the channel, hit that like button. I'm obviously not in my studio. I'm going through AirPods, so I apologize for any technical issues we might have. We were having trouble even getting everyone on the screen before. I'm just going to go ahead and bring on James and bring on Dave. What a few days, guys.
Crazy.
I did post a few things this weekend, but I tried. I was so emotional that I really wanted to throttle everything back. But, you know, it's amazing. There are amazing thoughts that go through your head when you hear about stuff like that. I was actually at a fundraiser for one of the most idiotic Democrat boondoggles on the planet, which is these new windmills that they're putting in off the New Jersey coastline for offshore wind power that are much bigger than anything that has ever been tried ever in the world, in one of the harshest environments, where we've already seen what amounts to whale genocide going on, and Greenpeace and all the others, because it's wind, are ignoring it. And so here we are, and the people in the thing before this happened, I mean, literally like 5 minutes before the news, people were saying that, you know, we're going to fight it in court, but really the only hope is for the Biden administration to be replaced. Because if he doesn't get replaced, you know, they went through a litany of mistakes they made. And then the news comes out and the entire audience is like, there are people speaking and everybody's on their phones. It was one of the most surreal things. So you're in this group of like a couple hundred people, very engaged, very interested in what's being talked about. And the whole audience is like on their phones.
Yeah, it felt like the whole world. Obviously it felt like the whole world did that. I mean, we were.
Yeah, I'm just saying that this, you know, it's almost like you were in like a boxing match with two people like beating the crap out of each other, and everyone normally standing really into it, and then the entire crowd goes quiet and they're looking. It's just amazing. It's just a surreal experience.
Yeah, pretty surreal. We have just finished up. We're leaving San Clemente, where we'd spent a few weeks out there in California, and you know. My wife turned to me when I had gone to the men's room after eating lunch, and she turned to me and showed me the news. There's just, and then the whole place was just silent. It was like almost the entire, you know, street. It was crazy. So, I mean, we've lived through assassination attempts before, and like you said, Scott, it's a somber moment. It's a real dark moment for the country. And so, but, you know, we wake up this morning, the markets are open, and we've got to you got to get your head together and be focused and make sure that you're positioned properly, because things are volatile and uncertainty remains. Although, like you said, the certainty of a Donald Trump being elected has risen. You know, if you remember, Dave, back in when Reagan, had the assassination attempt, that I don't know if, Scott, if you have that graphic, but he pretty much, it was such a landslide victory his reelection, it was incredible. I mean, I think every single state was red except for maybe Wisconsin. Dave, I can't remember, but
yeah, I don't remember which one. I mean, I do know this. I think that people and look, the media has sold their soul for the most part, one way or another. I mean, Fox on one side, but everybody else, most of the rest of the media, abandoned all pretense at journalistic integrity. The New York Times basically came out with a famous thing when Trump was running in 2016, saying, "Yeah, we don't care about being objective." When you have that world, they're complicit in what goes on, no matter how you want to look at it. Anyone who says that the Democratic rhetoric isn't complicit. I mean, Biden put a bullseye on. Schumer will do whatever things necessary. All this other stuff. I mean, there's so much of it. They all know that they went too far. It's sort of like anyone who's raised children has that moment when their kids have done something not just bad, but bad so far that they know they can't get away with it, and they give you that look that says, "Okay, I'm about to be punished." All the Democrat leaders, not all of them, there are quite a few that are not like that. I mean, I always talk about Richie Torres in the Bronx. I don't think he's ever done that. And there are quite a few that have not, but the ones who have know who they have, and they understand they've been radicalizing people. The media certainly has been radicalizing people, and you when you get to that level of complicity, you have two choices: do you dial it back, or do you double down? My guess is you're going to see both. But the one thing that is clearest that just struck me immediately after, and I said nothing all weekend. And I'm not like Ryan Selkis, who's a Trump supporter who's like screaming about roasting people over open pits of flame. I'm not saying any of that. What I am saying is we saw the most stark comparison between a sitting president and his challenger that has ever been seen. We have basically cadaver-like, not admitting anything, not saying anything, not really leading, not doing a thing, waiting way too long to make a statement, making a statement that's way too short, not taking questions, etc. Versus, I'm such a badass and I love this country that I'm going to put my life in danger. And if anyone read the First Lady, Melania's letter, now I don't know if she wrote it or her speechwriters wrote it, whatever, but she obviously approved it, and so did Donald in all likelihood. That was one of the most heartfelt, best written letters I have for public statements I've ever seen. The best we get from Jill Biden is pablum to justify her putting her husband through another election cycle, which quite clearly over 70% of America thinks she's committing elder abuse. So that sort of stark comparison is going to resonate at the polls with swing voters, and there's just no way around it. I mean, the world has changed, and no matter how you want to slice it, the world has changed, and it's changed in a reasonable way.
Yeah, I mean, when you talk about it from a market perspective and the odds, poly market, which is the best we have, I think, where people are, the sharps are putting their skin in the game, actually betting their own money on what's going to happen. It's at 70%. I think that Trump's going to win, went up 10% on the day. So this isn't, we're not speaking in theory of what happened. This is what people are, putting their money where their mouth is, and what they believe is obviously going to happen. And when you talk about the markets, I mean, these headlines, right? Bitcoin retake 62K as Trump trades back in vogue after weekend attack. I personally I can't do it with these headlines.
There are 2 points here. Scott,
Bitcoin rallies as Trump optimism powers crypto after shooting. It just seems so I don't know, tasteless.
It's clearly true. But before we talk about Bitcoin, I just want to make one other point about what this means for the election, and one point about crypto. The point about it means about the election is simple. There's an old expression: a picture's worth 1,000 words. In propaganda, in media, in persuasion, they say a powerful image can make all the difference. Many people believe that the image of Nixon with a bead of sweat on his brow when he was debating Kennedy was enough for Kennedy to win that election. People don't understand Nixon was the VP of an incredibly popular candidate, and was probably the odds-on favorite to win, given the way the country was going, based on voting on the economy and the various other things. The debates happened, and Nixon didn't look as presidential as JFK. And yet, people today look back and say, oh, JFK must have been wildly popular. No, that was not an easy election. It was extremely close. That image mattered. We now have images, so many of Biden, from the debate, from wherever, that are negative images. But that image, that picture of Trump, the one, with the flag, that look, it's up there, going to be up there in people's minds with Iwo Jima. Now, should it be? Probably not. Was it? But what does it demonstrate his personality to a T? Yes. Everyone who says this doesn't make any sense. It's like, when has he ever cared? He cares about Donald Trump, and he cares about this country, and he clearly does. I mean, you could say you say whatever you want. I mean, that picture basically sums up. This is a man who will fight for what he believes in. Full stop. And that resonates. There's still quite a few Americans out there who believe that a leader who will lead from the front, not from behind, is important. I mean, I'm not going to lie, I'm one of them. I mean, I, given the fact that the Biden administration has tried for all of his term to strangle my business, hurt the people who I care about, and destroy jobs from and has succeeded in destroying jobs from friends, there's no way I would have voted for Biden anyway. The issue was, do I, vote for RFK, or do I vote for Trump, who can win? That decision seems to have been made for me. But, it was never going to be voting for the current administration. But there are a lot of people on the fence. And think about the other thing that happened last week, and it was huge in the election. The Republican platform comes out that Trump wrote. If you read the National Review or any conservative website, any of the more extreme ones, they were all pissed off. You know why? Because Trump basically told the extreme wing of the Republican Party to take a hike. And for the first time, the Republican platform does not call for a federal abortion ban. For the first time, he clarifies that he supports IVF. So in the same week that Trump tacked to the center visibly on the only other issue other than his personality the Democrats had, this happens, taking away the issue of his personality, at least modifying it. That's why your odds are the way they are. And there's a lot of people saying, oh, I don't believe it, we were going to do the 2025 project. It's like the Republican platform literally contradicts the 2025 project on most of what they say are the extreme parts of it. Parts of the 2025 project make perfect sense. The stuff about the bureaucracy, DOE, that kind of stuff. I agree with it. There are other parts that I absolutely hate, but the ones that I hate, things like the national abortion ban at conception, other stuff like that, those are not in the platform. Those are not what Trump stands for. And
I think we need to pivot from Trump's political beliefs and back to McGlone.
No, I know. I'm just saying that when you understand the election odds, it matters. Now, the last piece is the fact that he immediately said he's going to go to Bitcoin 2024 and speak.
Yeah. Well, he's not canceling anything.
And he didn't change his flights from the RNC. So he's at the convention, he's meeting with delegates. Can you see that map that I put on? Can you see
I gotcha.
So this is Reagan after his assassination attempt and his reelection. And so, pretty stark difference in that, but pretty stark difference in the map there. But look, he's going to speak at the convention. He changed his message to apparently to be one of unity, and so it's going to be strong. So now you pivot back to what's going on in the markets, and you can see the markets this morning. It's pretty interesting that we just turn around and the market is trying to position itself for what they believe will be the Trump trade, which is, the dollar is higher. You've got the 30-year Treasury yield that crested the 2-year yield for the first time in a while. And so what's going on there? Well, people believe that Trump's policies will be inflationary. And so you've got the rate premium trade coming back. That's it's called the steepening trade, the yield curve steepening trade. That's pretty much the favorite trade of Trump reelection. So it's interesting. And then as far as Bitcoin is concerned, Yeah, it's obvious. He's made it very obvious that he's pro Bitcoin on his platform, and he's the candidate that you need to vote for if you are pro crypto and pro Bitcoin. He's made it really obvious. So it's not surprising at all that Bitcoin has rallied, and it rallied on the backside of news that Germany was done selling. They were sitting on top of it for days or maybe even a couple of weeks, and so that's over. And Bitcoin got to a level. Scott, you do a lot more, TA than I do, but it got to a level that I could see that was pretty strong support level. And so once we got to that level, you turned around and you had some shorts that apparently were liquidated at the 62,000 level last night. It kind of held that level as now support, and here we are. So we'll see what.
The chart was screaming bottom. I was saying it all last week only because I am a very simpleton and I like one really good indicator, and that's when RSI is oversold and you get bullish divergence. It's simple, but it works. You had it at the top. You had bearish divergence. Here where price is making a higher high and RSI is getting weaker. You have RSI getting stronger while price goes down. You flip back to 200 MA, and here we are. So. Listen, technical analysts will tell you all day that regardless of what happens in the news, the chart had it there. There's a pretty big news event. And, I think that's that's maybe not the case here. I love that there's people in the comments saying I have Trump derangement syndrome. I think that it was one of the most powerful, impactful, incredible moments I've ever seen from any human being, regardless of what you think of him. And so, yeah, I don't think that's fair. I think I just try not to play politics and to ride the middle. But I think it's very clear here that he's going to be better for the industry. That said, it's worth us discussing the fact that, Ro Khanna, the Democratic congressman who will be at the Bitcoin conference as well, actually, I'll be interviewing him again, from Silicon Valley, did finally host his long-awaited roundtable with the Biden administration, Cuban, Scaramucci, Brad Garlinghouse, all the hits. And they said they made tremendous progress. Listen, show me the money, right? I mean, show me the money. Like if you're gonna veto SAB 121 and then have a conference, I don't believe it. So we have to see actual action and not rhetoric. But it's very clear that at least there's fear on that side that this could be a pivotal issue that swings the election. That said, this election is done.
I mean, the problem with look, Roe, I think. Roe and Richie Torres both kind of embody a Democrat that I respect, right? So, nothing personal against people like that. I mean, we disagree on where we should draw the redistribution line. We disagree on how much government should be used to steer the economy as opposed to try to, help those who need to be helped. But generally speaking, on most social issues, a lot of issues, there's a lot of common ground between, the centrist Republicans, which I'm definitely one of, and others. I mean, huge props to what he's trying to do. I mean, but if the administration continues to push forward with Carolyn Crenshaw to be renominated to the SEC, after she wrote what was, and there's no way to sugarcoat it. She wrote a dissent on the Bitcoin ETF that were it forget college, were it a high school economics paper, it would have failed. It was so bad, so politically rabid. It should have been an immediate, if there was a way to fire her from her job, she should have been fired. It was embarrassing. So bad that I actually wrote a full point-by-point takedown. She made comments that were so mindlessly stupid, like the concentration of Bitcoin mining risk, not understanding how a pool works, not understanding anything of it, never taking the time to dig an inch below the surface of any of what she said. This takedown is available on the CoinRoutes blog. I've posted it repeatedly, but blog.coinroutes.com, you'll see a takedown of her dissent. I mean, it's pages of just absolute rabid anti-Bitcoin stuff. And many of the things she said were exactly what was rejected by the courts. And if you're an SEC commissioner, what you're basically seeing is she basically said, I don't care about the courts. I don't care about what's common knowledge or what's the law. I have my agenda. And her agenda is against our industry and against progress. And this is the person you put up to renominate for the SEC. I'm sorry, it is an immediate disqualification from the administration. You want to get something, at least pull that. SAB 121, there again. It's not like this is controversial. And what they did in the aftermath of that veto is even worse. And people should know this. So it's not controversial because SAB 121 was a accounting guidance. It didn't go through the peer review process. I mean, the public comment process didn't go through. It wasn't subject to the Administrative Procedure Act. It's advice, except for every single bank knows that if you violate staff accounting guidance, you will get an enforcement action against you. So it has the force of law. So that's bad enough. But what does this advice do? This advice basically said if you're a regulated company, you can't custody crypto. And then what did they do afterwards, after the veto was secured? They started giving exceptions to their friends. And so if you're a large, well-connected donor institution, you could get an exception. If you're not, you can't.
So let's just, but Dave, unpack that for the listeners, because it sounds super confusing. It's a, SAB 121 was, it was a staff accounting advice from the SEC directly to financial institutions. And so it didn't go through the review process, as Dave is saying. It didn't go through the comment process of legislation, meaning it didn't go through Congress. So Congress should have vetoed. They should have struck it down, because it wasn't really a law that went through the process, the public process. It was an end zone run that the SEC did by just issuing this statement of advice and policy that wasn't from the legislatures and legislators. And so they should have struck it down, and the president should not have vetoed it. That's ridiculous. And obviously he has Elizabeth Warren and her, anti-crypto army in his ear. And so nobody really believes that anymore, that we've seen over the last month, at least the last 2 weeks. Nobody really believes that Biden is the one who is pulling policy anyways. It's his administration, it's his staff, it's the people around him. He can barely stay awake apparently. So, but the reality is that he should not have vetoed that. And now the back door, the system of cronyism is back in place, where the SEC can give a pass to certain large institutions. And that's what Dave is talking about. That's right. And that is exactly the opposite of the kind of level playing field, pro-innovation administration that we need. It's even worse than the original conception of just stopping the banks from being able to offer custody. And it's just the reason I brought it up, Scott, is because what Roe wants to do, what Mark Cuban wants to do, and look, I've had some conversations, some public ones with the Mooch. What they want is the administration to tack toward the center and embrace those sorts of ideas. The problem is that it just, as Mike McGlone is fond of saying, show me the beef. They haven't done it. And, I'm sorry, but, look, I'd be perfectly happy in fact, it would be great if they would do that. But until Elizabeth Warren is out of politics, and until the stench of cronyism is removed, you can't possibly think that this is anything other than a token effort by the administration to try to decrease the one issue that's going to hurt them. And that to me is crazy. Now, the funny thing is Arthur Hayes wrote something that went much farther. I don't know if did you have a chance to read his, I forgot the title. Not recently. No.
Yeah, he just put out one. And he basically said the same thing about Trump. And he said, well, make sure you get words or actions from the Republicans, on the piece of paper signed before you sign up to vote for these guys. And I understand that philosophy, but we have a very stark choice here. And it matters. And that's why if you want to know why is Bitcoin rallying, if Trump won the election, Bitcoin would be at the all-time high already. It would have been a God candle. He didn't win the election. 70% means there's a 30% chance he loses, right? So keep in mind, this is just a taste of what happens.
You think if he wins the election on the day that he wins, we get a God candle to the upside?
Unless we're already there.
I think
Unless
it's
we're
going to
already
be.
into
Look, I
price
mean,
discovery.
I think that will be well priced in
yeah,
personally.
it'll be.
But
I think it'll be priced in. I mean,
Well,
David,
but that means
it'll be
that we
like
have
a
a big rally in the fall, which is what you and I have been calling for in the first place.
yeah.
I mean,
Right.
your base case has been that in September, October, November, that's when we're going to see the beginnings or the next major rally in Bitcoin. We've been saying that. I mean, just based off of the 4-year cycles.
No, we can't.
Yeah.
We can't.
To say the stars are aligning would be an understatement at this point.
yeah, go ahead, James.
I was just going to say we can't ignore that now we're in a situation where the economy is turning over. Even banks are talking about their smaller customers, their lower income customers are struggling. You're starting to see it in retail price. You saw the producer price, the producer prices are hanging in there, and that's not good. Just to unpack for people, that means that producers are still having to pay for raw materials and products that they're going to make into retail products, and they're getting their margins are getting squeezed. So everything kind of squeezes now with the high interest rates and borrowing costs, and you're starting to see that. And the Fed knows it. They're just looking for enough information. Like we're gonna keep hearing the trajectory to 2% is solid. The trajectory to 2% looks right. Like we're on the way. And at some point that'll replace we've hit our 2% target. And so they will concede. Will they do it in July? No, not unless we have horrific retail sales numbers and our next PCE. But we do. I mean, I do expect PCE is going to slow, and that's the other inflationary number other than CPI, and the core PCE that extracts food and energy, which is pretty volatile. So, we probably will get a Fed pivot here, and the Fed futures are showing a super high percentage.
I think it's over
Likelihood.
80% for September.
Yeah, it's over 80% that, and I haven't seen the markets this morning, so I don't want to quote the exact number, but I wrote about it this weekend. But that we're going to get a cut in September and another one in December, and then a more than 2/3 likely. It's over like 85% chance of each of those, and so. And then a 2/3 probability, 67% or something, that we're going to get another cut in between those two meetings. So it's super high likelihood we're going to get 2 cuts, maybe 3, according to the markets. And you're starting to see that in the markets. We've got political unrest. You've got a former president, current presidential candidate who had an attempt on his life, and the markets are up today. I mean, you could say that's resilience. You could say a lot of things. You could say that it's just the Trump trade. But it's clearly everything kind of filtering into the probability, and we started seeing it late last week, the probability that the Fed's going to cut. Everybody's making the bet here that the Fed's going to cut before it's too late. They usually don't. I mean, we've talked about that ad nauseum. They usually wait until it's too late. This is an election year. There's massive fiscal stimulus coming out of Washington with $2 trillion plus deficits. So it's it's a lot of noise out there, and it's hard to look at past and say that this is definitely what's going to happen. The Fed's trying to avoid that very problem, that they wait until it's too late. And people are kind of, sorting out their bets to saying that they're going to cut before they're not going to hold for longer and wait for the 2% inflation print. They're going to cut before that because they're going to say that the trajectory is in the right direction and we're close enough. And we don't want to slam on the brakes here. We want to keep tapping them and then take our foot off. We've already seen QE. They were going to cut that from 80 billion a month to 40 billion. They cut it down to 25 billion. And so that's why M2 is expanding. We're seeing an expansion of the money supply now. And so it's interesting to see that these inflationary policies are still kind of in place in the back doors. But you're seeing certain parts of the economy grinding down from high interest rates and from exactly that. So
James, I want to ask you, this is the yield curve, obviously, you're talking about. Can you unpack that? I guess if we zoom in more, you can see that the steepening as it's rising, right here, I guess. If we go in on the daily, you can see it, I would say, much more dramatically that's coming. So it would be uninverting if it gets to that red line, basically, for people who don't
Yeah.
understand. We've been inverted historically. Why is that the quote unquote Trump trade? Just unpack it for people, and what do you think it takes for us actually to normalize to get
Well,
back
I think,
to 0% or above?
yeah, I think, well, it goes from the 10 all the way to the 30 is the Trump trade would be that people expect high inflation and higher interest rates longer term. So you would have the 2-year rate come down the versus the longer rate. So if the bet is that the economy is going to roll over and we're going to go into a recession, then longer term interest rates would be lower than the current rates because you're expecting that the Fed's going to ease after a certain period. The 3-month and the 2-year, what people look at as far as the kind of short term rates. T-bills are just they're basically the Fed funds, and so you're looking at that and saying, okay, well, now these rates are coming back up compared to the shorter term. What does that mean? Does that mean that we're going to have liftoff here? And the answer is, it means that people are expecting that Trump policy will be inflationary. He will not, try to balance the budget. He will not curb the spending out of Washington, and his policies will be expansionary in that there will be less regulation. There'll be there are fewer expenses for small business and for even large companies, and trade policy will be it will be positive for U.S. companies, and so that's what you're seeing. You're seeing that kind of steepening, which means that the yields in longer term dated treasuries 10 all the way out to the 30 are going up. And part of that is because investors want to be compensated for the higher likelihood of long-term perpetual inflation. We've been talking about this for a long time, but I believe that it's a foregone conclusion that we're going to have high inflation for a long time. Whether or not they admit it in the CPI and the PC and all that, people feel it. Everybody around the country feels it, and you see all these videos now of people making the same exact purchase, just clicking a button and having the same exact items bought from 2 years ago, and the items are up 30, 50, 70%. It's like, you can't ignore that. There's real inflation out there. And so that's the people are looking for that real rate to come up. And so that's what that trade is.
And you
That's
have to
great.
contextualize this to Bitcoin, right? So, we've been talking about things, but let's try to bring it together. So why did your thesis and my thesis, what was our thesis that we would languish post halving and see a rally in the fall? Well, the reasons are a couple. First, euphoria into the halving, people buying the story, and then the cascade of the miners are going to collapse, so the network's not going to work. What's going to be the catalyst? All that going into the summer, it seems to happen every time. And so at this time, we had added to that, market sales from Germany, the Mount Gox is going to come live, yada, yada, yada. And so we've had a prolonged period where if you look at this 140 days, are we at now? 50? I don't know, but it's a pretty long period of time since it hit the I won't call it an all-time high because in any rational way it wasn't, but since it hit the local high, we've had this period where we're in this trading range and we're still there. And I don't expect to. I think there's a chance now that we do break out of the trading range on the upside over the summer, which I didn't think.
Well, on that point, Dave, that one thing I didn't say before we had Germany back off. You've also seen hash rate really come down, meaning that we've had minor capitulation here. Finally, people look at the public miners, but you've got a lot of small miners out there that have long-term energy contracts that have been selling Bitcoin just to keep up with their operational costs. And so they've been doing this ever since the halving. and they've been playing chicken, hoping that the price of Bitcoin comes up before they they have to shut down operations. But
I think you got to change the verb tense. I think you're right, but I think that already happened. I mean,
I'm saying
saw from peak to trough, we saw what looks to be, a 20+% correction in the hash rate. That is since stabilized. That is since stabilized. And if you look at the level where we are, the absolute level of approaching 700 exahashes, keep in mind that we were below 200 or at 200 back in January of 22, or back in the end of, not January 22, in the end of 21, we were well below 200 when that.
Yeah, and it got to 660, and it's back down to 550 according to blockchain. So.
Yeah, I'm looking at blockchain. I'm looking at a different.
Yeah, I mean, it's hard. It's really hard for the listeners. It's really hard to tell exactly what the hash rate actually is. These are all.
Yeah, it's non-trivial, but the fact is it's more than triple where it was the last time we were actually at the all-time high. So that's important. Now, people say that's overplayed, but that's true. But hear me out. So the rest of this is happening. So we already had this idea that seasonality and understanding why will be in the cycle. We've seen the price of gold and the price of all other assets, risk or otherwise, because of the inflation of the monetary supply, go up. So the coiled spring that we look at for when Bitcoin finally rallies is rather substantive. Right, gold is at a much higher price at 2,400 than it was when Bitcoin was last at these.
Yeah, I fully expect gold to break out.
Exactly, and I think they move. So the issue is this the cycle that Bitcoin becomes an inflation hedge? I would have said no. I'm not so sure now, and I think that matters. So people buying Bitcoin are buying it as a long-term hedge against currency debasement. Do people think about that in terms of the CPI? I mean, maybe in the back of your mind, but I think for the most part, people look at the CPI and say, well, if it goes up too much, they're going to be forced to hike rates, and that's going to hurt my risk assets. And so it sort of had this kind of weird negative, good news is bad news. Scott, this is where you use humans are going to human, all the time on this stuff, right? But I'm not so sure that that's the way it's going to get looked at. It's particularly in a deregulatory environment as we go into the fall. So look about what could be happening in the fall simultaneously. You could be going towards a positive administration for the asset class in general, allowing most of America to actually participate fully. You could be at the same time having a very clear fiscal stimulus at the same time as the Federal Reserve is saying, okay, well, we really shouldn't be choking things off. At the same time, you're getting FTX giving back dollars to people who wanted to be in crypto, which is larger, by the way, in total dollar size and value than Mt. Gox. And by then, Mt. Gox will be resolved. We will see how much got sold versus didn't get sold versus I wanted it then, I want it now. A lot of the people who owned in Mt. Gox, quite frankly, a lot of them are, well, look, until Bitcoin passes gold, I'm not selling. They call that hodling. I mean, people say, I'll never sell my Bitcoin. It's like, I find that kind of ridiculous. But I do think it's not ridiculous to say, I'll never sell my Bitcoin until it gets to a price that I think fairly values it as a digital store of value. And I think that those forces all combine. And that's why, look, I've made my bet. I think that this cycle, which means by 2025, I expect there's a very real chance of actually, I'm more bullish than Max Kaiser. He keeps saying 220 is in play, and I think 240 is in play. Now, is that going to necessarily happen? No. Is it a bit hyperbolic? Yes. But would I be surprised if it happened? No.
Why would I don't think listen, we've had muted cycles each time, obviously, from all-time high to all-time high. It was many, many multiples before. Last one was 3.5x, 20 to 70-ish. But even if we do a 3x from the 70-ish highs, or 210, 225,
exactly,
overshooting by a few percent or undershooting by a few percent would surprise no one. I think
you've got different dynamics now. You've got the ETF dynamics that we didn't have before, and that's a lot of institutional capital has been sitting on the sidelines that can absolutely pour in, and they are not price conscious like we are. They just aren't. They go along together. They're like the ultimate sheep.
Well, it's funny about we when you use that word, because I have basically been trading like them. I.e., I haven't been trading, right? Because it's
Dollar
hard.
cost average and buy dips, right?
Yeah, I mean, like if you're an individual investor, you're probably looking, meaning retail as a whole.
Right.
They're not as price conscious and price sensitive as retail as a whole. They move together in large swaths.
Yeah, I mean, look, all I'll say is this: that if you think of the headwinds, what was the biggest risk? Oh, and we haven't talked about the other story, which would be ridiculous and totally on script and totally unconfirmed, so people shouldn't be rushing in to buy on it. But the multiple sources are claiming that Xi is going to unban Bitcoin for his people.
That's right.
And it just all of this.
I've heard that rumor. I'm not saying it's right that he's doing it. I've heard that rumor.
And we're finally done with this one. And speaking of nations, Germany.
I mean, this one's going to look as stupid as I made the call, and I think it'll be another one of my right calls. I made the call at 54,000, and people said, "Are you calling for a Pico bottom, Dave?" And I said, "Well, a local bottom, and honestly, a bottom if you told me that the stock market's not going to crash or risk assets are going to crash." I called it, and I basically said that the people that from Saxony are going to look as stupid as Gordon Brown did for when he timed his gold sales at an average price of $270 an ounce.
Yeah.
Right. I mean, it's just like, it's one of those things. Now, understanding that from what we know now is the law said they had to sell it. The one thing I will say about the way they sold it was the law didn't force them to be stupid, and they were stupid. They could have moved all of their Bitcoin to exchanges and sold nothing for a month. They could have done this months ago, and then use algorithms such as my company's or others to sell them in a way that no one would have known until after they were done. And exactly. You wouldn't.
I mean, it looked so clumsy. I mean, it was so clumsy. It was either intentionally trying to push the price down, or just giving it to a trader that had no idea what they were doing, just blow it out. Like you've seen those trades before, where you just blow it out. I don't care what price you get, just get rid of it. That's but it looked either intentional or incredibly clumsy in their trades. Like, why would you just dump hundreds and hundreds of coins in a matter of hours? You could see when they came out there. It looked ridiculous. So,
I mean, give you some numbers just to understand. So I'm writing our first half report card for CoinRoutes, and on $8.4 billion in the first half of spot Bitcoin alone. And we traded a hell of a lot more than that over the quarter, but just $8.5 billion of spot using our vanilla algorithm, which is the one that I would recommend to someone like that. Order sizes over 20,000, so it's 13,000 orders. You can do the math. These are reasonable tranches. The total cost compared to the midpoint of where Bitcoin spot was trading across a group of exchanges was less than 6 basis points for our customers. That's net of exchange fees. And if you compare to the midpoint, it was less than 3 basis points. These people lost double-digit percent.
It's incredible. Insane.
Contextualize those numbers. Now, why do our clients do so much better than you might otherwise expect? Is because there's a lot of stupidity in the way people trade this stuff. A lot of people just pick up the phone or do a telegram message to a group of OTC brokers and say, "What's your bid for this block?" And of course, the ones who don't win get to sell in front of it, and the ones who do win makes a wide spread. And it happens. It happens all the time. Or worse, others just go and hit the button like these idiots did on exchanges and just start market selling. And you see it all the time. I mean, it's unfortunate. And the market's a lot better today than it was 2 years ago, and dramatically better than it was 4 years ago. But the truth is, there's a lot of stupidity. And and why do I care about this? Well, I care about it for a lot of reasons, but not for our listeners. Probably the most important thing, it just shows how early we are in the cycle. Nobody would do that if they inherited if you had seized somehow a block of Apple stock or Tesla stock or whatever, you would not sell it like this. You might do a secondary offering, which would be, fractions below the current bid, but you would do it in a way that your banks would make sure, yeah, they would make some money, but you wouldn't destroy the price of the stock. They just don't do that. But with Bitcoin, they do it. And it tells you how early we are. It's people aren't taking it seriously. So imagine a world where governments who do seize it start taking it seriously and people start trading it seriously. That maturation is where we will be when Bitcoin is on parity with gold. That's been my thesis all along. And clearly we're not there yet, because you get people out there say, well, it could go to zero tomorrow, I should sell it immediately. And that's literally the mindset you have to be that dumb.
Yeah.
And so from a viewer perspective, I mean, you need to understand that every time one of us, any of us, I don't know how many thousands of people are listening to this call, but every time you're in a conversation over a barbecue or whatever, and someone asks you about Bitcoin and you start talking to them, the odds are high that if you're talking to a group of people, at least someone in that group of people will start doing the research. And that gets more and more, and you get more and more people to understand the value proposition. The markets will improve. And as the markets improve, it becomes a virtuous cycle. And so that's kind of why this German thing, I think, is a big deal, because it becomes an object lesson.
James, there's something I want to ask you about. Actually, I just saw this tweet. It's not necessarily Bitcoin related, but here it is. This is interesting. 27 of 34 global central banks, or 80%, are expected to ease their monetary policy by the end of 2024, the highest since 2021. That was just 10% expected in 2023. 42% of central banks have been easing monetary policy. Canada and the European Central Bank were the latest to cut. Meanwhile, the market is pricing the first Fed rate cut in September and a total of 2 cuts this year. Basically, it just says the world is waiting on U.S. rate cuts. 80% of the world is just ready and waiting. I mean, that's a lot of central banks cutting.
Right. And so in that meantime, so we've had we had softer, we still have inflation, but we don't have the same inflation we had a year ago. And it's giving Fed a little bit of firepower here to say, maybe we can start easing. We've had a couple of prints that are okay. The unemployment rate has ticked up over 4%. The SOM rule has not been triggered yet. We won't go into math of that, but basically it's not there yet. And which is good, because the SOM rule means we're in a recession. But you're going to get a few things here. This week we're getting retail sales, really important number. Tomorrow that the median forecast has that dropping by 0.2%. So that's going to likely show that the consumer is slowed down. They're not spending as much because they're just at their kind of limit. You've seen the credit reports that people are at their limit of their, especially in the lower demographics of available credit. And so use of credit has slowed, and that's a negative indicator. Means that people are running out of runway there. And then we've got things like housing starts and whatever, but that's not a really big deal. We've got our jobless claims, but next week we get GDP and we get PCE, and these are numbers that our next Fed meeting is at the end of the month. I do not expect the Fed to cut rates in July, but I do expect them to have plenty of firepower by September to do so. So that would line up with that chart, Scott, which is, I think that the Fed's going to cut in September, and they'll likely cut again in November, and then again in December. That's what I would expect the trajectory to be.
But it's going to be an orgy of central bank cutting the second that we cut.
What's that? Yeah.
It's going to be just an orgy of central banks cutting once we cut, because once we give them the green light that it's okay.
Yeah, and part of the issue here is that when our rates are higher, I mean, we're seeing what's going on in Japan. I mean, Japan is an extreme situation with their yield curve control and holding that 2-year or their 10-year down to 0% for so long it's holding that beach ball down. It's up at, I think it ticked over 1%. And so the Bank of Japan has had to come in and buy yen, sell dollars to kind of hold the yen from running out of out of control. And so meaning falling, the yen getting weaker versus the dollar. So everybody's on guard and standing, waiting for the dollar to weaken here, because as we hold rates higher, the entire world is looking at our rates as a place to get yield. And just you remember how long we went for ZIRP policy, and we had a decade of zero interest rate policy. Yield hunger is real, and people don't want to give that up, and so they're looking for any spot where they can get yield. And if they can get a better yield in the US dollar, they're going to do that. So so that makes central banks reluctant to be cutting their rates in the face of our rates still high.
I mean, I think that last week was fascinating because there were all these headlines that the dollar average dropped. And if you look, almost all of it, I mean, most of it was the yen. So the yen basically was at 161, dropped down to 157, which is another way of saying, okay, mission accomplished.
Yeah, the DXY doesn't have that many currencies in it. Exactly.
That's right. And so pretty much all the others were, 20, 30, 40, 50 basis point moves. That was a multi-percent move. And effectively what it was the Bank of Japan, and almost certainly with borrowed dollars. I doubt they sold their treasuries because the treasuries at the same time strengthened. The yield went down. So liquidity was pushed into the market. We don't know the data yet. Well, we won't know it for, I don't know, when do we find that out? In a month or so, James? I don't know.
Officially. Yeah, but they did. I can't remember if they announced it, but they did intervene. I mean, it's obvious.
Oh no, they intervened. The issue is where'd they get the dollars to do it?
Oh yeah, I mean that's a
I think it was borrowed, not sold.
Swap line or not? Yeah, that hasn't. I haven't seen that on the Fed.
Exactly. And so the point being that those sorts of actions are extremely, liquidity. The notion that we're going to be able to get through this. Sorry, the notion that we're going to be able to get through this without extreme liquidity being injected to me it seems impossible. And I think that when we clear the politics out and we clear the cycle out and you get to the sort of why are we in Bitcoin in the first place kind of narrative, that liquidity is there and is real. And so when the reason, now Mike's not here, he would be saying yes, but show me the beef, and okay, we could do all that stuff. I won't make fun of him when he's not here but his central thesis is that we're going to get a great reset because they're going to have to pull the liquidity out. And at the end of the day, where I fundamentally disagree is I don't think there's a hope in hell that they're going to pull the liquidity out. They're going to try to taper it, but they can't, because if you do that, this isn't a perpetual motion flywheel. You have to keep throwing liquidity at that flywheel to keep it moving. God forbid it goes down. I mean, what happens to the U.S. economy if the stock market crashes?
The stock market, yeah, that's a first derivative, and then you've got the Treasury market locking up. That's it. I mean, that's lights out. You can't have it.
But the point is policymakers need the wealth effect. They need it. And, there's no question about it. We're at stretch valuations on the S&P. But if you've noticed over the last couple of days or a few trading days, the Russell has broken out to the upside. Now, what's the Russell? For those who don't know, the Russell 2000 people think of it as small cap. It's companies that are listed, sampled by the Russell Corporation, over $100 million in market cap, but below the top 1,000 companies in the United States. So you have a company 1,001 to company 3,000 in size. So are those small caps? Are they small businesses? It's not really small business, but people use it as a proxy for small caps. That is generally considered much more sensitive to the business cycle, much more sensitive to liquidity and rates than large caps.
Higher for longer crushes those companies. I mean,
which is why.
Because the borrowing rates are higher, it squeezes their margins, it makes it difficult for them to profit. Yeah.
Those companies also suffer disproportionately due to regulation as well. So so one would expect the ultimate Trump trade although probably, we could talk about tariffs and bad, what stuff, whatever. But the fact is, the ultimate Trump trade is buy the Russell, short the larger caps. Buy the 2000, short the 1000. And why is because
which is why the Russell is up 1.4% today versus the S&P up 0.4%. So.
Right, exactly. And now, would the ultimate trade end up being the short on the other side? No, just be buy the small caps. Why? Because they're more sensitive to deregulation and they're more sensitive to liquidity. And that's something that it's telling you, something that I said last week on a crypto town hall. Honestly, most of what's been going on in the market has been fairly rational lately.
Yeah.
And that's a rational response from a market perspective to recent events. The actual only irrational response that I've seen over the last 3 months has been Bitcoin dropping down to 54,000. I mean, now we're at 63 or 962, 950 or whatever it is. But, it's, to me, that was irrational. But honestly, real rationality will be dramatically higher prices. The only asset that I know that I think is dramatically undervalued that I look at is Bitcoin. In the crypto world, there are a few others as well. I won't go into them because we can talk about them anytime people want, but on the macro side, it's really all roads lead to liquidity. All roads lead toward governments having to stoke and push on that string where people are taking debt and to make it easier. And that's why it's hard to be bearish on assets that are directly related to that. Now, does that mean that companies are going to be able to generate more cash flow when they're already at, 200% of GDP as market cap? Maybe not. Maybe not. And that's Mike's point.
Right.
And but I do think that it's important for people to understand what we're talking about here. And what we're basically saying is the only way out for governments in this debt cycle is to engineer more nominal growth to create higher nominal taxes than we're currently spending. That's it. Can they do it? I mean, honestly, don't know.
For a while.
But they certainly can't do it with a massive regulatory state, and they certainly can't do it by increasing tax rates.
Final words,
They're
James.
they're hoping to bridge that gap. And there's no systematic, like the great machine of the United States Treasury and Fed. But the reality is the market is hoping to bridge that gap between the Fed and Treasury having to inject liquidity into the markets to produce what you're talking about, which is nominal growth, which is just expansion of the money supply to make the tax receipts higher nominally in order to keep managing those debt payments. But I think the market is hoping that we can bridge that gap between that and the miracle of production that we hope to get from AI. And that's a whole nother discussion, but that's the hope that we can do that. Yeah.
For next time. Yeah. Hopefully we'll have Mike back next Monday, but thank you, gentlemen, for, this is one of those days where it's tough to decide what to say, what not to say. I see the comments. I love people saying I shouldn't be in the middle here. This comment, actually, I read this one. Scott, why choose to ride the middle when you have complete lunatics on one side and good people on the other side? How about having some conviction and standing for good versus evil? Like, I don't even literally know which side is which, because here's how I view politics, just so people know. I don't view myself in the middle. There's independent and there's unaffiliated. I'm unaffiliated. I think there's politics and I'm like orbiting the entire thing. Because I think it's all birds of the, I think it's varieties of birds of the same feather. So I don't view myself, I think I'm rational. So maybe I'm moderate if you had to qualify me, but I think that it's all a huge, unfortunate game. And I want to be outside of it entirely. That's the point of Bitcoin.
The reality is there are extremes on both sides that have been given a disproportionate voice.
That's correct.
Unfortunately, the media does everything they could to make those extremes be what we all hear.
That's exactly right. So that's the gist of it. Anyways, I shouldn't have said that. Anyways, let's we'll be back next week, obviously 9 a.m. Eastern Standard Time. I'll be back tomorrow with my show, back with my normal high quality sound and lights and everything. Guys, thank you so much once again. And we'll see you next week. Bye everyone. Peace.
That's dope.